Hey everyone, and welcome back to the channel. Today we're diving deep into the world of foreign exchange, specifically looking at the Japanese yen, which has been making some serious waves. If you're trading or just keeping an eye on the markets, you've probably noticed the yen is holding on to its recent gains, and there are a couple of big reasons why. First off, let's talk about the Bank of Japan, or the BOJ. They've hinted that they might be looking to tighten their monetary policy. Now, what does that mean? Essentially, they could be considering raising interest rates or making other moves to strengthen the yen. This is a huge deal because it's the complete opposite of what's happening elsewhere, particularly in the United States. Over in the US, the market is buzzing with speculation about the Federal Reserve, or the Fed. The consensus is building that the Fed might actually cut rates more than previously expected, not just this year, but looking further ahead into 2026. When a central bank cuts rates, it generally makes its currency less attractive to investors looking for a good return. So, you have the BOJ potentially tightening, which is good for the yen, and the Fed potentially loosening, which is not so great for the US dollar. This growing difference or divergence in policy is a major factor pushing the yen higher. On top of that, there's the classic safe haven appeal. Whenever there's a bit of uncertainty in the global markets, investors often flock to assets they see as safe and stable, and the Japanese yen has traditionally been one of those safe havens. So, any wobbles in the global economy can give the yen an extra boost. There are also some homegrown issues for the US dollar. Lately, there have been some concerns swirling around about the Federal Reserve's independence and the long-term credibility of its policies. These kinds of worries can chip away at confidence in a currency. As a result, we've seen the US dollar index dip to a one-week low. When the dollar weakens, it naturally affects currency pairs like the USD JPY. This pair has been under pressure, hovering near that significant 156-point level. It's a key psychological and technical point that many traders are watching closely. A sustained break below this could signal further strength for the yen. So to recap, we have a perfect storm brewing in favor of the yen. The Bank of Japan is hinting at tighter policy, while the US Fed looks more likely to cut rates. This policy divergence, combined with the yen's safe haven status and a slightly weaker US dollar, is keeping the yen well supported. It's a fascinating dynamic and one we'll be keeping a close eye on. What do you think is next for the yen? Will the BOJ follow through, or will the Fed surprise us? Drop your thoughts in the comments below. Thanks for watching. Don't forget to like and subscribe for more market updates, and I'll see you in the next video.